Welcome to the President and CEO Focus on the Middle Market podcast series, where President and CEO founder Paul Stukel discusses middle market issues with business leaders from across the nation. Today, Paul speaks with Ken Esch, partner of PwC's Private Company Services, about the encouraging results of the fourth quarter Trendsetter survey of private middle market companies.
Gosh, it was a really astounding report. I mean, these things keep getting better and better, right? In terms of optimism, it's really amazing. I mean, what did you think overall?
I'm delighted with the results as well. And I think that we've seen kind of a consistent building of momentum with an upward trajectory here that is pretty exciting for the future. And as we've often talked in the past, one of the things that we've always focused on, is what's going on in the labor market. And we're starting to see an acceleration there. And I think that that's another real positive signal for the future.
Obviously, the headline here, of course, is the remarkable optimism about the coming year on the part of private companies, which is fantastic levels. But the headline seems to me is that thing that we've been talking about for the last many quarters here is the qualified worker issue, and that just keeps rolling. It just doesn't seem to be any solution in sight.
Yeah, and as you noted, the issue with the qualified workers and lack thereof is getting worse. And we've always kind of identified that as a potential issue, but we were talking about it when it was in the upper 20s. Percent for the response rate, and now it's upper 30s. And I think that is something that needs to be sorted out quickly, but I don't really see any silver bullet answer here. I think that many of the companies that we're working with see the benefits of training somebody that's got just good skill sets, but maybe not specialized for their specific business, and doing some sort of internal training program or mentorship to learn on the job. And through that, they're able to contribute, but they may not be able to contribute on day one. It may take them a little bit of time just to learn the business and how to operate. But finding that worker that's going to contribute immediately has been very difficult for private companies.
Well, what's also interesting, and I think the report addresses this a little bit, but the fact that there's 60% of private companies are planning to hire, again, it's really kind of a small increase overall. Sort of aggregate is like 1.6 increase in headcount, which is really not very much. Wages sort of staying the same. I guess I'm interested in what your thoughts are in terms of why that is, because there is this enormous growth. Optimism. There's, a lot of people are saying that they're sort of hitting the maximum of their productivity, all of which would suggest, A, increasing headcount significantly, and B, increasing wages, and wages seem to be remaining relatively flat. What do you attribute that to? Is it primarily the lack of qualified workers that are causing people headaches, or is there something else there that we're missing?
Well, I think the lack of qualified workers is an important component of that. And what we found with our survey participants, they said that if they were able to find that qualified worker, their headcount increase would probably have been closer to 2.5%, 1.6. Mm-hmm. And that highlights that lack of qualified worker issue. And then I think the other contributing factor is that many companies have made investments in technology that result in lower needs for people that within the business, and we're moving, I think, towards a bit of a tipping point where we see demand increasing and strong prospects for growth, and you're likely to have to start adding, some workers. But private companies are just doing it a little bit selectively and trying to find that worker, that's really going to pay off quickly and contribute, to the business right away. And I think what might be a little bit interesting was we think that the wage increases are going to be about 2.75, somewhere in there, over the next year, and the labor statistics I think came out today, and we're talking about an increase of about 2.2%. So I think that the wages will continue to tick up a little bit. And when we're talking about some of these private companies, in a growth mode, they're probably paying a little bit more than some other more mature businesses, and it's an indicator of a little bit of competition in that labor market.
Yeah, you mentioned demand, and this is something I've actually been wanting to ask you for a while. It's intriguing to me, or confusing to me, really, when we have this sort of overwhelming optimism about growth, both in terms of the economy and even more so in terms of their individual companies. There's still this number of 60% saying lack of demand is a barrier to growth. I recognize that's down a little bit, well, considerably, I guess, from
not a lot.
prior years, but do you think that's just sort of a natural tick that everyone's going to say immediately? I'm worried that people aren't going to buy my stuff.
Yeah.
Because those two things don't seem to go together. I mean, you can have everyone thinks the economy is growing like crazy, but there's still 60%, well over half of companies think lack of demand is their barrier to growth. I mean, those two things just don't seem to work to me.
Yeah.
Am I missing something?
No, it is consistently, among the highest concerns and barriers to growth for private companies. And I focus a little bit more on, what are the changes, survey to survey. And as you note, that's come down, pretty dramatically post-recession. And it's really kind of lowest levels, since before the recession. And I would say that drop is an indicator of, a strengthening economy and contributes to these optimism levels.
Yeah.
And really across the board, we've seen a drop in these barriers to growth, which I think is a further indicator of the strength of the overall economy and the optimistic views of our survey participants.
One area that was actually not quite as aggressive, I suppose, was the international side, international expansion. There does seem to be some trepidation about the global economy, which is clearly shared by not only middle market or private companies, but pretty much everybody. With the troubles that China are having, the emerging markets are becoming more dependent on the mature markets, and the mature markets like Europe are not doing so hot. There's clearly a reduction in optimism about expanding overseas.
Right. Yeah, I think that's true, but from what we hear from the survey participants and what we hear from our clients is that the growth strategy still includes investments in foreign markets, including emerging markets. They may slow that down, a little bit in light of some economic headwinds in a number of foreign jurisdictions, but they're not taking that off the table. They know from a long-term growth perspective that they need to be in those markets, and it's likely to eclipse, U.S. growth rates over a long period of time. So it's a concern, no doubt about it, just like, the rising dollar, is affecting a lot of companies that are exporting out of the U.S. today. That international expansion is still going to be an important part of the growth strategy.
Right. Yeah, I thought it was also interesting the looking at the spending sort of prospects for companies, i.e., in what they're going to be investing in, the opportunities they're going to be pursuing. It seems to be really widespread. If you look down the list, I mean, they're all above 50% of the top. Productivity, cost containment, hiring, tech, the whole bit. I thought that was interesting. Yeah, that seems rare to me that it would be so evenly split. I mean, what do you think?
Well, it is rare that it's so evenly split, but I think that is a great indicator of where we think the economy is headed, and the the optimism levels, that they have in their own businesses. So we're starting to see some investments, in property, plant, and equipment, technology, people, all to try to capture, this growth opportunity that's in front of them.
Yeah. So in an overall really, really positive report, and I guess we've already talked about the qualified workers issue, but what other pitfalls are you guys seeing? Things that, in a generally rosy environment, where are the thorns? What do you think people need to be looking out for?
I think that in addition to the qualified worker, just concerns that companies have, there's some concerns about the strength of foreign markets in their economies, and the strengthening dollar. On the domestic side, I think that there's some concern with falling oil prices with certain industries, relying on oil. That pullback in CapEx budget and exploration is going to have a ripple effect through certain areas of the economy. Concerns probably about rising interest rates, as the economy continues to improve here, could dampen it. But those are concerns that are perhaps on the radar screen for our survey participants. But their concerns about those type of topics are down considerably since the recession, and I would just look at it as general concerns, as we always have about the economy, as opposed to real specific risks to the business.
Be sure to check back for future episodes of the President and CEO Focus on the Middle Market podcast series. Thanks for listening.